What's going on, guys, and welcome back to another video. So I suggested last week that I would make my updated budget video in terms of what I do with my own wages on a monthly basis. So just a quick background, I work in a bank and I also get paid on a monthly basis. Also for this video, I won't actually give my exact figures, but we'll actually break it down in terms of percentages and what I do with each of my allocated capital. But just before we get into today's video, as always, if you're new around here, it'd be brilliant if you consider subscribing to the channel, as we're just 11 subscribers away from our next mini goal of 650 subscribers. And with all that being said, let's dive right into today's video. Now obviously, every individual will have different circumstances. Firstly, as you're probably well aware, everyone gets paid different amounts. Some would get a lot, some won't get as much. Also, the frequency of when you get paid will also make a difference in your budget. For example, if you get paid weekly, fortnightly, or monthly. Also, you need to take into consideration if you have any dependents, such as kids, if you have a mortgage, if you have car repairs, insurance, any other light and heat, etc. Literally could be anything, so it really does depend on the individual. But today we'll just go through my own personal budget with the hope of hopefully trying to help some people out in terms of how you should allocate your capital. As I said at the beginning of this video that I wasn't going to give exact figures, we'll actually discuss this in percentage form, as this will help be more generic and simplistic for everyone to kind of understand what figures I actually put away into each different thing. So you can see on the top here, I usually kind of bracket into two kind of separate bands in terms of importance. Now obviously food, etc. down below here is very important, but I tend to kind of put the other things up here in kind of a more important bracket first. And again, it's also worth noting that this is just my own wages. My fiance as well makes obviously her own money, so this is excluded from the spreadsheet, as I just want to give a kind of more simplistic personal one person budget in terms of my own scenario. So firstly, we'll just go through my monthly budget, and then in the second tab we'll have a look at what I actually have saved and what I've allocated into different classes. So first of all, you can see on screen is my rent. I put 11.4% of my overall wages into this. Now it's kind of handy, as we're saving for a house that I'll mention later on, that I'm still actually living at home, so we don't actually pay that much rent in comparison to if we actually lived in a rented house itself. So that's quite handy in terms of saving for other things that we'll mention below. The biggest outgoing expense in terms of savings, so it's not really outgoing I know, but in terms of my wages, would be my mortgage savings. And at the moment we have 28.5% allocated from my monthly wages to put away. Now our mortgage has already been approved, however I still want to save as much as we can in terms of savings for this, as the more we have saved, the less we'll have to pay over the next 30 to 35 years. So then we have the next one is the wedding savings, and we have about 14% of my overall allocated funds into this. So we're getting married next year, so again, it's kind of one of my main priorities to have as much as we can saved for that. And even if we have excess saved for the wedding, then after that we can just pump all that money back into the house. So you're better off having more than too little. So the next two factors kind of go hand in hand with what I just spoke about, and they are the house fittings, which have about 5.7% allocated. And we also have my emergency fund. Again, this would probably be more for kind of car insurance, car repairs, buying new cars, anything else that might pop up. So it's definitely worthwhile having an emergency fund as well, because again, you can never know what might pop up tomorrow. So it's definitely better off having that than, let's say, having to get a big loan if something did arise. So that is very important in my opinion, to have an emergency fund. Then you can notice that one of the main things we talk about on this channel is investing, and I put about 11.4% of my monthly budget or my monthly wages into my trading 212 portfolio. So the next four factors I don't really stick to as tight of a percentage than I do, let's say, the guys up here. And that is because this changes a lot more than, let's say, fixed figures such as rent and mortgage savings, etc. And it's also worth noting that, for example, personal here, that's just if I want to buy anything for myself. It's outside of all savings and everything else, so it's kind of nice to have a fund like that as well, because again, if you're working hard all month, it's kind of nice to reward yourself also. So we have about 14% of my overall wages for personal use. However, I actually don't usually spend anywhere near that 14%, as I usually tend to keep it if I can, and I put it into savings or investing, as I believe over the long term it's definitely more useful. And especially if you're still in the pandemic, there's not a lot you can actually buy or go do, to be honest, bar exercise. So I really do feel that over the last year or 10 months, that because we're kind of working from home, there's a lot more opportunities to save a lot more money. That kind of brings me on to the food and petrol next. Again, obviously, food is obviously essential, and the petrol, because I'm working from home, I actually don't spend as much on petrol either. Clothes, again, if you're working from home and you can't really go out as much, there's not much point in buying brand new clothes every day or so. So you're kind of better off saving up that money as well. So when you can go back out and socialize, you'll have a lot more kind of excess money to do what you please. And then we have other as well. This could be anything. So basically, it's kind of miscellaneous. It's about 2.5% of my wages. This goes from everything ranging from credit, like for your phone, to anything else that might pop up. For example, if I wanted to buy a new camera, if I wanted to buy, let's say, a brand new mic for this channel, or if I wanted to buy something for the background, it literally could be anything. So that's kind of the main cusp of what I do with my overall monthly budget. Now next, let's go to the next tab. So here is my overall savings accounts. This is a joint accounts for both myself and my fiance, so this is everything included. We can see on the left here that we have, for example, credit union 1 and 2 being my own and also my fiance's credit unions. So in my own, I kind of keep that for mortgage savings, wedding savings, and house fittings. This takes up about 11% of our overall savings at the moment. Then my fiance's credit union, pretty much the same with the house savings, fittings, emergency fund, and wedding savings, equating to about 9.86%. We then have a post office account with our mortgage savings and wedding savings, again equating to about 30%. We have a joint bank account as well for mortgage, which equates to nearly 40% of our overall savings. Again, on trading 2 and 2, we have about 9.7% of my overall money here at the moment. And again, it's quite handy to have money in your investing accounts as well, especially in things such as ETFs that are relatively safe, instead of just leaving them in a bank account, because if it's in a bank, it loses money over the long term due to inflation. So that would equate to our overall 100% savings there. We can then see over on the right here that we have it split down into different factors such as mortgage, wedding, house, emergency, and investing would be the main 4 or 5 different topics that we're currently focusing on. The mortgage obviously is taking up the most at the moment at 76% of our overall savings, as we want to have as much as possible saved here, because again, we won't have to pay back as much over the long term, effectively reducing our overall repayments and not having to pay as much in terms of interest rates. We then have the wedding fund, which takes up 11.1%. Now obviously once the wedding is over, we'll have a lot more capital to pump into, let's say, the mortgage, the house, the emergency fund, investing, etc. as well. So that's kind of just for the next year or so until this goes. We then have the house fund, and this is just for fittings and any repairs that may arise when we actually buy the house. It's only 1.5% at the moment. So again, when the wedding fund is gone, these kind of areas such as house improvements and kind of house fittings will definitely take more of a priority, and we kind of be hoping to have that up towards the 10% mark. Similarly with the emergency fund, this includes, like, this isn't just for emergencies, obviously this would also be including a holiday fund and a kind of rainy day fund as such. So again, just like the house fund, we want to definitely up this percentage once the wedding is over as well. And finally, as mentioned, we have our investing account here. I have a few different brokers at the moment, trading 2 and 2 being my main broker, but I also use the Giro, and I'm actually planning on opening a few different ones as well, just to help diversify my risk in terms of if any broker did go bust or if anything did happen. Because as you know, for example, trading 2 and 2, I'm only covered up to 20,000 euro there. So, like, for example, if I have 30,000 invested in trading 2 and 2 in the kind of months to come, I'm actually kind of open in terms of if they did go bust, I'm losing quite a lot of money as I'm only covered up to 20,000. So that's what we have there, 9.7% for investing, and all 5 of these combine to an overall savings of 100%. So that was kind of just a quick rundown of how I allocate my money on a monthly basis once I get paid. Now, I'd obviously probably prefer to get paid every fortnightly, even though the amounts are the same over the 12-month period. But I think it would be a lot easier to budget in terms of getting one lump sum every month. It kind of does take a bit more to kind of actually budget it out properly. Over the next few months and even years to come, I'll definitely document everything in terms of what we're doing with the house, in terms of where we buy, what we do, how much it costs, everything budget related. And I might even get my fiancée to come on as well eventually if she decides to do so, and she could even talk about some of the house renovations and everything kind of house related that she'd be more into as well. So if you found this video anyway helpful or entertaining, it'd be brilliant if you consider liking the video. And again, as always, if you're new around here, it'd be much appreciated if you consider subscribing to the channel, as we're currently now just 10 away from our main kind of goal at the moment of getting to 650 subs before the end of the month. And for everyone that has already subscribed and liked videos in the past, I just want to say thank you very much as well for your continued support. And if you have any questions, comments or queries, please comment below and I'll be sure to get back to you. Thanks very much guys, have a good evening and I'll talk to you in tomorrow's video.